Hey everyone, welcome. So this is a new setup. This is my outside office, and I'm trying to do a live stream, and this is the first time actually. So give me a thumbs up or comment, and let me know if you can hear me and see me okay. I've done a live stream like months ago, one day, but if you can just comment and let me know, that'll be really, really appreciated. Thank you so much for being here. I really appreciate all of you, and I know it's a big day for folks, those who are, SoFi investors and those who want who like the stock. Let's see. All right. Awesome. Okay. Very good. Thank you so much for letting me know. And sorry for the change in the office, so it might look different than my videos. Okay, great. So I'm going to share the screen, and we are at the SoFi investor screen. Nothing so far yet. And I have the Bloomberg as well open. So depending on where we get the news first, let's go. That's right. Let's go. All right. Awesome. So we are going to welcome some of you. I recognize from my video, from the comment, and all right, hello. And some of you are from the Discord. That's great. We are bullish. Noto is the man. That's true. That's awesome. All right, let's go. Let's see. Nothing yet. I'm refreshing. It's 4:01. Sometimes they do it on time, sometimes they don't. So let's see what we have here. Nothing on Bloomberg as well. I'm monitoring that. And it's what I have seen in the past for these companies. Well, not in the past, in the last few months, I would say, is that some of these companies, even though they have an amazing result, like they beat all the expectations in Q4, they are doing wonderful, they still come out and the stock still goes down because of the future guidance. That we are going to have less member. We have seen it with PayPal. We have seen it with, the Upstart's the only one actually that kind of did really well after the earnings. But Lending Club, PayPal, Square was another one. But most of these other companies, they were just horrible. All right, average is 1505. 1505 is not bad. Mine is also in 15s, my average for SoFi. And when you see the stock in 910, it's so tempting, so tempting. Trust me, I want to buy so bad, but all my money is tied up. So either I sell all my Tesla and get into all SoFi. That could be a possibility. Yeah. Average is 11. That's great. All right. Okay. So let's see. We are declining going into the end. That's very common. Very common. People try to take profit during the day before the earning because they know the stock is going to get pumped. They know that everybody is going to come in and have bullish predictions and will buy, and then they take profits. These are all day traders. These are not investors. So it's very common. All right. Yeah. See, you, man, hats off to you if you are converting Tesla shares to buy, because that's like, to me, whoa. Phew, I wish if I have the guts to do that, to just sell all my Tesla and buy SoFi. All right, that's another one, Steve. Amazing, man. I can't. 924. That's a great price. That's a great price. 924. All right, nothing. Come on, SoFi. Let me just quickly do the terminal here. Nope, nothing yet. And I've been watching. And Neo also they reported their deliveries, and they came in less. So Neo is going to go down too. That's another one. Okay, so it says 5 minutes. Let's see. Okay, I'm going to refresh this quickly. And this is, by the way, this is the chart or the sheet that I shared with everyone. I'm going to make it bigger so we all can see that. And so this right here is all the revenue, the mean consensus that we have right now, the low consensus and the high consensus. And once the result come in, we are going to plug it here. I have done the same for the Q3 and I have done the same for Q2. So we have these numbers to kind of compare it with. I'm estimating that we are going to have a beat in revenue. I think it's going to come close to like high consensus. The mean consensus is 278. I think we're going to get more higher than that. So 5 p.m. So 1 hour from now. 5 p.m. EST is the conference call. The earnings are released after market close. So they're going to release the earnings first, and then the conference call is going to be at 5 p.m. EST. We'll see. If it gets too boring, we might come back for conference call. Will miss EPS, but will guidance that will move the stock upwards? No, actually, yeah, if we beat the guidance, absolutely. So let's say if we beat EPS, then the guidance we have to beat by a higher margin. Then only the stock I can see it go upward. But if we are going to miss on EPS and the beat on guidance is like less, and they are not, thinking that they're going to repeat the previous year's performance, then we might have an issue there. Okay, all right. So April 18th. Let's see. They're saying, what time did they come out? So the earnings come out now, like after the market close. And you know how it is, right? After the market close could be any time now till 5 o'clock. We don't know. That's why I have this page on as well. So I'm refreshing here, and I have the Bloomberg as well. So what I've seen in the past is that Bloomberg reports faster, like their website would report, but Bloomberg gives us good numbers right away to the revenue and all the other details. Okay, let's go. That's right, Nick. Let's go. Let's do this. So, the funny thing is, guys. So I actually this I think around 11 or 12 o'clock, I got an alert that I had this limit set on the order to basically execute a options trade on SoFi for the covered call. And I was thinking that it's not going to happen, like I was selling the call. And it did actually, I set an alert to our Discord members. It did actually execute it. I sold a covered call for this Friday. And see, I don't like to lose my shares like that. For this Friday for 1650. There's no way in hell we are going to go to 1650 this Friday, unless they say that, you know what, Amazon is buying SoFi or something like that. We are no way in hell we are going to 1650 this Friday. And I sold on my 10,000 shares, so 100 calls. So that added up, like the amount or the volume or the quantity of the calls added up. All right, CRM after hours. CRM is moving up. That's good, CRM. AMD is crashing. Okay, let's see AMD here. Actually, I'm gonna pull it here. I don't want to go in any other screen because then I'm gonna lose the. Okay, let's see. We have it here. No, nothing here. Nothing here. And this is the event lobby. This is where we will have the call. Okay. And we are going to, yes, down 7%. Ouch. That doesn't help. Okay, let's see. All right. Oh, semiconductor sales to Russia banned. Okay, but that shouldn't hurt Intel. Okay, so Russia situation, right? I mean, of course, everybody is just crazy on that. I'm kind of very proud of. Do we have it? No, we don't have it yet. I thought we got the SoFi results. No. So I'm kind of very proud of what companies are doing. I know that this is not, any kind of political show here, and we are here for SoFi. But I'm really proud of what Uber is doing, what other companies are doing, because the only way to muscle out is to kind of stop serving the country, right? I mean, Russia is known for their oil reserves, and they're supplying like 25% of the world's oil and gas supply. So I feel like, if people stop buying from them, I know it's hard, countries will have to dip into reserves, but if people stop buying from them, that's the time I feel that, that's the way to muscle somebody like Putin out. I mean, it's just crazy what's going on there. I'm reading reports, I'm looking at the news. I was like, really, that's what we need right now, with all that's already going on, where inflation is all-time high, where, COVID is now coming to an end, travel and tourism, small businesses suffering. And now we have to have this war. I mean, it's amazing. Okay, all right, let's see. Wait, okay, I will 41, 4,100 shares. That's awesome. That's good, man. This is good stuff. All right. Data should be out in 1 minute. Let's see, 1 minute. Come on. All right, where are you? Q3. Come on. I'm refreshing. Nothing. And nothing in the terminal as well. So if you pay attention here, so last time what happened, right? So in Q3, this is what happened. So Q3, the diluted EPS adjusted came to the high consensus, and the low consensus was really low. So this is what the beat was when we saw the stock like really rally in November. But then in Q2, when we had that one-time expense, look what they were expecting and look what became. So this was a big drop in EPS, and that was the reason why I feel that we had this huge, sell off after the earnings. But I'm estimating that we might see a weaker EPS, which is like close to consensus or low, but it's not going to be like Q2, where we were low was 0.07 and it was 0.41 is what they delivered. I don't think that's going to happen this time. But again, we have those warrants that are still outstanding. It's going to be EPS is going to be tricky, and I'm thinking that we can come close to that mean consensus here. We will be fine. We're not going to drop that much. But if we can come close to this, wow, it's going to be crazy. Okay, it's tanking now. Oh wow, it's out. Where is it? Come on. I don't see it. Why is the stock tanking? It's not tanking. Hold on. This is bad. Oh, there you go. All right, they released it. Where is it? Why can't I? There you go. Okay. Oh, 286. Nice. I'll show you guys in a second. Okay, right here. I'm going to make it smaller right here. Okay, so we have total net revenue month of 285. That's year over year change. And we are going to get, give me a second, guys. I'm going to put a better copy here. This is not a good copy that I want to get. There you go. Okay, that's awesome. Loss per share, basic diluted 0.15. Okay, when 1.85 net adjusted revenue is 279. Oh, this is good. Okay, so I'm gonna go ahead and just hide myself here for a second. All right, so 285, and I'm going to actually enter this here. Why don't we have it here listed? So weird. They're not giving it here, but they released it. Okay, I'm gonna come this way. Can't see the whole thing. Yeah, still nothing. Okay, but I have it here in the Bloomberg. I'm trying to pull out a better copy here. There you go. Q4 EPS 0.15 beats 0.17 estimated, adjusted sale 279.88 million and beat 279.29 million. So they have a beat. They have a beat on EPS. EPS was 0.17 and they reported 0.15. So which is great news. And I think, in my opinion, let's do a quick check here. Okay. So SoFi is flying, man. It's flying. That's great news for us investors because they have a beat. All right. This is awesome. Okay. I'm going to go ahead and pull a better copy here. Okay, so they're seeing their adjusted revenue year over year 1.57 billion for 2022. Consensus was 1.45, so they're beating on the revenue as well, which is going to be amazing. This is all good news. Stock is going to fly. That's great news. Oh, that's awesome. Okay. All right. So now it's coming in parts. This is weird. Okay. So stock is up like 8% right now on the results. Results are great. Only if we can get a good copy so I can see in detail. I don't know when they're going to post. So adjusted revenue of Q1, the adjusted revenue is 310 to 320 million. Consensus was 306.32 million. So their estimate for next year for this quarter and 2022 is right on par. They have a beat on the revenue, but their Q1 revenue is the same. All right. Just trying to get a better copy here. Okay, so let's work with what we have here. So 2021, 285, 608 is good. All right, now this is amazing. All right, so this is where here, 3-1, there you go. Okay, all right, now we have it. Yeah. Okay, so we have 285, 608, net loss is 111, EPS per share is 1. Okay, total net revenue. All right, so next go here, and I'm going to add here. All right, so we have here, and then we have an EPS of 0.15. Do that 0.15 here. Okay, so diluted EPS is on there. Okay. And then we have not continued as important. We also reached all-time high in member added, product added, and engagement as well. We finished 2021 with approximately 3.5 million SoFi members. Whoa, 3.5 million members, up 87%. That's amazing. That's wonderful news. And or 1.6 million from where we started the year, and approximately 500,000 ahead of our stated goal. We added a record 523,000 new members in the fourth quarter. This is very good news, all of it. Amazing. A new high in absolute number terms, up 39% versus the number net adds of Q3 2021. Okay, we also extended our string of triple-digit year-over-year product growth for the sixth consecutive year, adding 906,000 new products, up 51% versus the number of net adds in the third quarter to end 2021 with a record 5.2. Okay. All right, 3.5. That's an amazing number. Yes, 3.5 million members is great. Okay, now moving on to the next. We were able to achieve these milestones in 2021. First, we continue to drive. Okay, I'm looking for the Ebitda target. Okay, our original 2021 member growth target of 40% and still hit our adjusted Ebitda target. Okay, wonderful. We have actually come in here. Okay, now over here. Okay, this is beautiful. This is wonderful. Okay, today SoFi is in the strongest position ever to differentiate our offering and ensure that we are delivering for our members and enhancing their experience with each new product they adopt. Our new bank charter will be a game changer for us. Okay, this is where I want to read this right here. Savings offering in marketplace and improving our price. Acquiring Technisys, a leading cloud native digital multi-platform. Okay, I just want to get to the meat of it. Okay, right here. Okay, total GAAP net revenue 285.6 million in the fourth quarter of 2021 and 984.9 million for the full year of 2021, increased 67% and 74%. Wonderful. Okay. SoFi recorded a GAAP net loss of 111. You know, this is not bad at all. This is not bad at all for a GAAP of like 111 million. I was estimating more because of the warrants. So this looks like a pure beat. This is awesome. Okay. Let me just actually pull that out right here. That's awesome. Okay, great. Now, SoFi also recorded the 5 nationally televised NFL regular season games in SoFi were being averaged by 22 million households. Okay, this visibility have increased. Okay, the brand. Okay. Oh, this is good. Total product added in the fourth quarter approximately were 51%. So, you know, one of the most interesting thing that I saw was their financial services product, because I know that Anthony Noto in third quarter said that they had a beat there, or not the beat, but they reached an inflection point in their financial products. And that is over here. We can see over 906,000 product that they were added, which is 51% higher than the approximately 600,000 added in the third quarter. 105% year over year. This is where I was saying that how many products can they actually add, but this is good stuff. Total product were nearly 5.2 million. Oh, this is awesome. Okay, let's see now here. December 24, home loans 657, 672, and personal loans, student loans. Oh, look at that. So student loan, wow, that's great. And December 31st, 2021. So if you really compare 2020 and 2021 home loans, this is okay. 67% increase year over year. So that's Galileo increased 67% year over year right here. Total accounts and 99 million right here. So 2021 net revenue is 53,299, and then we have in thousands. Okay, so that is from the Galileo. That's there, getting it here. Okay, where is there? There. Okay. Okay, consolidated statement of operation. Let's see this here. So loans 91, and then we have 84. Third-party interests, corporations, non-interest income, sales. Okay, sales and marketing. So look, sales and marketing. So this is good. 129 and then 72. Okay, so they spent a lot more as compared to 2022. While the loans went up by like half a percent, yeah, almost 5%. Okay, so we have here provision for credit loss, technology, and product. So one of the things that I look at is how much was their sales and marketing spend as compared to the previous year, and also the December previous quarter or previous year's last quarter. And we can see over here that they went really high in terms of the expense. But look over here, we have loss per share is 15. This is, the most impressive part, or the most wonderful part, is the loss per share. This is wonderful news. Okay, weighted average, 3 months ended. Total net revenue is 285, 171, and then servicing right is 194. Okay, adjusted net revenue is 279, 876. Okay, lending. All right. So net loss is 111. Oh, this is not bad at all with what was going on with the higher spending, and of course with the warrants expiration. Interest expense. Okay. That's a great guidance. Absolutely. That's a great guidance. The stock should fly. It's not going to be 19, somebody I think mentioned here, but it's going to fly. We have right now, we have about 11%. Yeah. So we are absolutely, it's better than going to $8, in my opinion, that, some of them were saying in $8. Okay. So assets, let's see here. So assets, it's 494, 872. Okay. Cash. So they have, how many cash they have? Okay, so they have 494, and restricted cash is 273. I'm sorry, I'm just reading it in my head to make sense of it all. 608, servicing right. Operating activities, we have net loss of 483, and then net cash burning and investing activities is 110. Net cash is operating 1.3 billion. Okay, and then financing activities, we have 9.5. Okay, so debt issuance. Yeah, see, this is where the student loan is killing them. Okay, net cash decreased 768. Total cash equivalent year ending December 31st. Cash flow. Okay, this is good stuff, guys. This is wonderful. Really impressed by what they have done. They have not only they have spent more money on sales and marketing, but their guidance has increased drastically. All right, this is good. Now the call, as I say, call is the most important part for the earnings, because in calls they answer questions from analysts which directly relates to the future business, because Wall Street is always interested in what's coming ahead, not what has happened in the past. Total, we refer to our customer members, we define, this is fine. Let's look at some more numbers here. Okay, quarter ended in thousands. So we have total interest income is 91, okay. And then we have September 30th. It was 136. Total interest, total revenue, financial services. Okay. Ebitda is 45. Okay. Adjusted Ebitda. That's interesting. Okay. I'm going to go back for a second to right here to the first thing here. Okay. So we have our directly attributable expenses 102. Okay, so what I'm seeing here is that their personal loan in terms of member loan that they have, their personal finance and their tech, all three are record highs. This is good stuff. 68% year over, more than double in the fourth quarter of 2019. So look at this. So record personal loan originations of more than 1.6 billion in the fourth quarter of 2021 were up 1 billion or 168% year over year, or more than double fourth quarter of 2019 pre-pandemic total. SOFI'S personal loan business outperformed due to improved execution, technology, and credit model enhancements, a reopening of personal loan credit eligibility, and continued strong demand for its high-quality loans. Full-year personal loan origination of more than 5.3 billion were more than double the 2020 total of 40 and 44% above 2020's pre-COVID level. This is very strong because, see, as the student loans go down, this is the sector where I want to see them lead, and they are doing a phenomenal job here. They are doing a wonderful job. In addition, providing loan referral fulfillment services to Pagaya and artificial intelligence enables SoFi to access a broader audience and drive. Okay, great news. All right. The student loan benefited from accelerating demand ahead of the January federal student loan payment moratorium deadline and severe increase in 2022. Of nearly 1.15 billion, increased 51%. So their student loan also increased drastically, but that also depends upon the May 31st guideline. Yeah, this is amazing. This is some very good earnings we have seen. I'm impressed. I'm really impressed because I wasn't expecting them to kind of have a beat and also have a future guidance this strong. The stock should touch like 1350, 14, should go. Let's see. All right. So let's see here right now, and we have we see I was drawing some lines here, and then after hours we have 16%. Yeah, this is good stuff, man. This is amazing. All right, so let's go to 1 minute mark and let's see. Yeah, look at this. Look at the chart. You see the chart? Let's see if you can see the chart. Okay, so what I'm going to do is I'm going to actually go and bring the chart out for stop share. All right, check this out. So it's really flying 15%. We should easily cross like $13, $14, easily with the guidance and with the earnings that they have. Look at the RSI. It's like the stock is flying. This is amazing. Congratulations, everyone. 10 cents. Yes. Touching 13. All right, so now comes the short play. All right. Yeah, that's a good point, right? If it's 16, I have 1650. I have a 1650 on there. I'll roll it out, to the following week or to the following days, because trust me, we still have Russia, Ukraine, we still have Fed. So don't forget that, that those are all, this is good stuff, but there will be a lot of profit taking as well, because those who were waiting for all this time is now going to take profit because they have been burned for so long. Don't forget that. So we are going to see some profit taking that's going to happen. And also at the same time, we are going to be seeing the Russia-Ukraine situation and also the Fed that's going to come out. So all hopes, I hope it crosses $16. Everybody will be happy, even including me. But I'm telling you, man, this is some good earnings. Wow, that's amazing. Yeah, should have bought more calls. That's right. So that should have, would have, could have is always funny in stock market. Yeah. Well, don't feel bad. I'm telling you, with the Russia and Ukraine situation, and when the more bombing that's coming our way or Russia's way, the stock market, you don't know, where it can go. All right, time for champagne. Thank you. I own 24,000 shares. Woo, that's a lot of shares, man. Congratulations. I hope that we keep it and we make this, home. All right. That's great. Okay, so let's see now what the stock is doing in terms of, hold on, guys. All right. Okay, so what I'm seeing right now is that we are going to see this rally continue. Then there will be some profit taking that's going to happen. And then see this right here, the yellow line, that was my line that I drew. Actually, let me just zoom out a little bit so you guys can see. Let me go on the daily chart right here. So this is a very, very, I would say, a point where we have to cross. And I'm going to actually go into the 30-minute interval right here. So this yellow line, the 1331, we have to cross this. We have to cross this to go to the next Fibonacci level, and then that 61.8, which is about set at about 1354. So if we cross 1330 right here, 1332, and after that we cross that 1355, then we are looking at a much solid gain. But if we are not able to cross this, then we are going to be stuck here. But again, the earnings were phenomenal. Very happy with the earnings. And I really hope that, you know, we see the stock just break this resistance right here, you know, and the support that we had, we felt like 1050, and then, you know, it's you know, I'm gonna go change to 1 minute so we can see exactly the pricing. See that yellow line right here? This is where it needs to go close. It came close and then it went down again. But this is the line it needs to close to go to the next Fibonacci level. All right, covered call at 14. You sold covered calls at 14. Now it depends on for when, for this Friday, for the next Friday, and then, you know, you can always roll them out. You know, that's a possibility. All right, short squeeze, another GameStop. Yeah, I hope so. We all will make a lot of money. All right. Oh, that's good, man. Everybody's here. It's like 24K shares. Wow, that's amazing. Okay, I'm sorry, I'm not able to. Okay, thank you for the donation. Wow, IPOE, that's amazing, Marcus. Good job, man. I mean, that's amazing. All right, so now let's see. Well, we should all say congratulations to Marcus because he's really, like, you know, holding stocks since IPOE. I mean, that's amazing. All right, 2,000 shares. Wow. Okay. And my 16K shares are finally into print. Let's see if we can continue. We need to go cross this right here, this resistance here. All right. This is great. Yeah. This is good. Will you be streaming the call? So what do you guys think? Put it in the chat. Should we stream the call? Because call is really interesting. I would love to stream the call, but we still have like 30 minutes. I don't want to bore you guys for 30 minutes unless we want to look at some other stocks in the meantime, or I can create a new stream. So should we do the stream the call? What do you guys think? Because I think listening to the call would be really interesting. Yes. Okay. Great. Done. We'll stream the call. Why not? Hey, you know, this is, by the way, this is my first live stream on this channel. The reason why I'm because as you see, I'm in the office, I'm not in my studio at home. So I'm like always can be called out on the floor any minute. So I don't like to do these calls because that won't be fair for you guys. But today I blocked my calendar. I was like, I'm going to be here. I'm going to be doing the SOFI thing. And trust me, I will get better. I will get better at this. I was looking at my source that I usually go for, which is Bloomberg, for everything. I don't usually go to the websites because this saves so much time. Everything is there. And Bloomberg kind of dropped the ball on this. They didn't release the earnings right away. It was coming in like parts. And usually they're pretty good. They give you like a summary right there. And it's just so much, you know, it saves so much time. It's amazing. Okay. All right. So some questions. Okay, let's see. Thank you, everyone. You know, thank you everyone for being here. I just, you know, love doing these SOFI videos, and especially the SOFI live stream today. I enjoyed it, actually. I'm having fun. At least I can interact with you guys in real time. You know, it's so. And thank you. Yes, Mo, thank you. You have been a huge supporter from the beginning. Some of you guys have been, you know, been with me on this for a long time. And I'm going to tell you something. So when I started the channel, I was giving myself 1 year. 1 year. I was like, I'm going to try it for 1 year. And if it doesn't, because when you put numbers, I'm a numbers guy in terms of the work that you put in, what are you getting in return? And I was like, if in 1 year, if numbers doesn't satisfy me, I'm going to stop. You know, it doesn't make sense. But then I started enjoying it, like 6 months into it. Nick, my friend, you know, that you all know, he's like, what are your thoughts? I was like, you know what, I don't care if I'm like, some videos I make like $30. It's nothing, I mean, like in terms of the amount of time that you put in making those videos and all, 30-40 bucks is nothing. And I was like, it's not. I'm just going to continue doing it until I get more into it, or if I really really like it. And the day I feel like I'm bored, and that's why you probably see that my sometimes I don't release a video. Sometimes, like this weekend, I released no videos, no Saturday, no Sunday. I was traveling. I was in New York this weekend, and starting Thursday, I'm going to Puerto Rico for work. First trip in Puerto Rico. Never been there. If anybody of you are from there, please, 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 let me know if any spots I can go. But I love business travels, and it was stopped for like 2 years. So I'm going to be going to Puerto Rico for 3 days, for 4 days. So I'm going to be doing videos from my cell phone. I'm not taking all the camera and everything with me, of course. So I'll be in a hotel. I have a project there. I'm going for 2 days and 4 days actually, but the project is only for 2 days. So I'll be doing it there, and thank you so much. These are the things that gets me, motivates me. Your comments, good, bad, ugly, some of them I have been really brutal on the comments, which I had to grow a little thick skin when I first started doing it. I'm like, oh man, nobody ever talks like that. But it's all a part of the game, I'm staying in San Juan. I'm staying in San Juan. That's where the conference is in Puerto Rico. And I have a education company. That's what I do for a living. I have a company. I have about 40 employees that I manage, and that's what I do day in and day out. And I do this for fun, the videos. Okay, thank you. 14 tomorrow? Yeah, absolutely. I think so. With the way, I mean, if there is no profit taking, look at the chart right here, right? So this is the resistance that I had, and then we had this whole thing now just struggling to kind of reach to that 1331 resistance that we have. And then after that, if we cross the 1331 resistance, then we have that Bollinger Band that I'm looking at 61.8%, the 1355. And if it crosses that, then we are our way to $15. But it's going to be a while. Trust me, it's going to be a while. It's not going to be that simple. All right. Thank you. Thank you. Appreciate your comment, Jackie. And Jonathan, oh yeah, you live in Puerto Rico. Amazing. So I'm coming there Thursday. I'll be there Thursday to Sunday in San Juan. And I have a project there, and I'm looking forward to it. It's like I live close to Washington, D.C., so it's cold here. And I'll be going in some warm stuff, so it's amazing. All right. Thank you. Thank you so much. And what's your nationality? What do you think? My accent, my look, everybody gives me like different things. But what do you guys think where I'm from? I'm pretty sure some of you know because I've mentioned that in my previous videos. But yeah, it's 14 tomorrow. Yeah, I'm streaming the call. We decided to stream the call. And yeah, they did. They had a revenue guidance here. I'm going to actually show you right here. So let me actually bring that here. So we have SOFI'S 2020. Hold on. And let me actually bring it here. So they're seeing 2022 adjusted net revenue for 1.57 billion. And if I'm going to go, I think you guys can see my screen. I hope you guys can see my screen. Let me see if you guys can see my screen. So they were saying that 1.452 was the adjusted, or was the previous annual revenue that they were estimating. So they are actually giving a beat, and now they're saying that they will be doing 1.57 billion in revenue, which is of course a beat in terms of what they were estimating here. So I'm going to fill these numbers when I have like time after the call to kind of make it all clean and nice, and then we'll do some calculations. And then after that, we are going to be, streaming the call as well. In the call, this is what I'm looking for before we jump into other topics. But this is what I'm looking for. I'm looking for Anthony Nodo, or whoever is speaking on SoFi, to give us guidance on how they plan to mitigate the student loan. Because remember, this is a company that started on student loan. So it's going to be very important for all of us to get that guidance from Anthony Noto about, hey, what are we doing with the student loans? So I'm really excited to see that let's see what they come out and give us. Also, the guidance that the recent acquisition of Technisys, that's going to be important, how they are planning to implement. Because see, to me, what makes SoFi more exciting is that they are not B2C, business to consumer, they are business to business company as well. And that's what makes things really exciting for me. Because if you are just B2C, you have a limited reach in a way, and your pocketbook, or I would say your revenue per transaction, is going to be less, because no consumer is going to spend millions of dollars, right? I mean, we all have, even if I open an account, how much money I can put in there? I can put in $10,000, $1,000, $100, $100,000. But when they deal with these banks, with these national, they're talking millions of revenues from each customer. And that's what makes this so exciting. Along with that, the very first video that I did was the video about why SoFi is a beast of a bank in their thought process. If you haven't watched that video, watch it. I released it like months ago. It's basically they have a product for each and every phase of your life. If you are a student, they have a product. If you graduate, they have a product. If you want to get married, they have a product. If you want to buy a house, they have a product. If you want to retire or you want to invest, they have a product. If you want to retire, they have a product. So think about that. They have product for each and every phase of your life. And that's what is exciting for me for this company and how they're doing it. It's amazing. Okay. Thank you for all the support. Thumbs up to everybody on TPC. You've been a wonderful supporter. Thank you for being on the Discord as well. And so I explained, I have an education company I run, and I have been doing it since before 2012, and also somebody asked me, I'll tell you a funny incident actually about this guy who asked me, what do I do for a living? Okay, Lucas, yeah, right, Nordstrom. So I actually had calls on Nordstrom last year, not this year. And I actually got out in time. And after that, the stock has been a sleeper. And look at this now. I mean, up almost $7. I mean, this is crazy. $27 Nordstrom. That's amazing. What they have. Again, everything is opening. Everything, people are shopping. People are going back. It's amazing. Yes, price stalling a bit. You think people waiting for ER call and guidance? Yes. So immediately what happens, right? When earnings come out, there are a lot of people, those who were waiting on the sidelines to buy the stock. They buy the stock as soon as earnings come, first in the game. As soon as the price go up, they sell. They take profit. These are the folks, these are the institutions, those who come in and they buy huge quantities and they liquidate huge quantities. Algos, mainly computers, doing this trading. They are set that if there's a beat, you go buy 100,000 shares, and as soon as within few minutes, sell it. And that's why we always see that anytime if something comes out, it kind of stalls a bit at this right after the call, like after 15, 20 minutes after the call or after the earnings. And then after that, when we had the call is when the real meat of things comes. And then the investors like you and me, because if you were like waiting to buy the stock, you would be like, it's too late for me to buy the stock. Like that's what we think. As soon as the earnings come out and the stock went up, maybe say 5%, we say, it's too late to buy the stock. Institutions don't think that way. They're like, okay, it's 5%, it's going to go up another 15% or 10%, and they continue buying. We don't do that. We will buy when we have a huge, I would say, strong guidance for future. And then the call went really well. And then now we are feeling confident and we are feeling that, yeah, I think this is a good company, I'm going to buy it. And then you're going to buy it over here. It's not that we are buying it over here. You will come out and you will buy this here. So again, it's all mentality. It's all mentality. We are not as ruthless with the stocks. I mean, I literally take Tesla stocks, or are like my babies, man. I mean, like my wife's like, what's wrong with you? Why are you like, never sell a single Tesla stock? Why don't you do? My friends always ask me, why don't you do covered calls, on Tesla? If I do it like 1,050 for like when the stock is like 800 for that same week, because I don't want to have even a chance of basically losing the stock. All right, so make sure you walk around. And yes, I will for sure. My plan is I'm getting there Thursday. Thursday is the only day that's not raining right now. That's what I see. So I'm gonna make sure I make the most of it. Okay, people, 500 like, please, 500 like. Yes, please hit the like button, send it over to your friends, and just let the channel grow. That's what we want. We all want. I put the videos out just so that we can reach out to more and more people. It's never about the money, because I don't make enough money doing YouTube. Trust me, that it's money for me, and that's why I like. I'll tell you. I'll share with you guys, because we all are here, and I'm pretty sure that you are here because you like SoFi and you like our channel. So few of the companies have been reaching out to me to sponsor the videos. And it happens as soon as you cross like 5,000 subs, they start reaching out to you. And my inbox is full right now of the sponsor. I'm a small channel, like 15,000 subscribers is nothing. Like think about the other guys, those who have like 1 million subscribers. So they reach out to me all the time to sponsor, and I'm always like very hesitant. I was like, no, I'm not going to do. I'm not going to do. So if you notice, I have a Webull link in my description, but I never talk about it in my videos because I don't want to sell anything. And yet I received like 5 free stocks because some of you signed up. So thank you for that. I mean, I was like, oh, it's like an email came from Webull. So like, you have this new thing, the referral bonus. I'm like, who signed up? I never, say anything or, do. So over the course of months, this one company has been very persistent. This Moo Trading, and very persistent. And I kept saying no to them again and again. And they finally send me the details. Finally feel a little comfortable that, okay, you will get 5 free stocks. And I'm like, okay, 5 free stocks for depositing like $100. I'm like, okay, that's a good deal. So I opened my account, just free account. I was like, I'm not depositing any money. I'm not gonna link my bank account yet because I want to see how it all works. Because at the end of the day, how many accounts can you have? I do my trading on E-Trade all the time. Then I have this Weibo that I like the chart, and then I have TradingView as well, where I do lots of my charting. So how much you can really do, with that. Okay, sorry, I'm going off topic here. Thank you. No to end the club. Thank you. Yes, I'll enjoy Puerto Rico for sure, for sure. All right, so please never stop. No, I don't plan on stopping. I don't plan on stopping until we get like a $10 million contract. Then I have to make a decision. I'm after one big contract right now. I hope I get it. Okay, this is definitely a great idea. Thank you very much. SoFi short, yeah, SoFi short, gonna get killed. So tomorrow, very good question, and I was going to get there, but thank you for asking, David. What do you think tomorrow will look like? So tomorrow look like is we are going to see a run up tomorrow morning at the market open. Then we're gonna see profit taking by 9:45, 9:50. I think we're gonna see some profit taking. And then if Russia-Ukraine behaves, and if no other bad news comes out, we're gonna see a run up towards the end of the day. It has happened in the past. I can only go by the history. Nobody has a crystal ball. Nobody can tell you what's going to happen. But we are going to see, in my opinion, we are going to slowly have some sell-off in the morning after the open. It's going to go up at the open because all the traders, those who don't have access to aftermarket trading, is going to come in and buy, and people those who bought is going to take profit. And then we are going to see some sell-off during the middle of the day, and then the stock is going to climb up again towards the end if no Russia-Ukraine news break, which is highly unlikely. Thank you so much. Randomness. Thank you for your kind words. I really appreciate each one of you. Yes, let's get 500 likes. How many likes are we? Where are we right now? I don't even know. I mean, that's like 26 likes or something. I don't know. I'm not watching, so I don't know. Maybe I'll just do another one. Yeah, 547 likes. Hey, we made it. Thank you, guys. All right. Thank you so much. Do some live trades tomorrow, man. Yeah, you think? You think it's a good idea? We should do some live trading tomorrow on SoFi stock. Yeah, we are streaming the call. No, I'm no guru. I'm just I just share what I see. Trust me. It's yeah. Work. You're absolutely right. I don't know your name, but work will always be there. I learned that. I really learned that when I had my kids. Before that, it was all work. And since I had my kids, yes, I can look at the shorts data. Absolutely. That's a good point. Let me see here. For the shorts data right here. Okay, no change. Still showing the same 101 million shares shorted, and the date is also the same. No change whatsoever. I don't trust Vortex that much, but I'm going to go and Vortex. Take a look at Vortex to see um, what we have here. Shorts. Okay, so short interest change is about 1.87% plus. Okay, and they're saying 17.51% shorted. They also have the same data as Bloomberg did. They don't have any new information. And if I look at advance, yeah, I think there will be a lot of short closing that's going to happen, or it's already hasn't happened. I have answered that question. I have a company. We need at least 500. Like, yeah, we got the over 500. Thank you. Jim Cramer is an idiot. Yeah, Jim Cramer, man, that guy has, you got to give it to him though. That's a tough job to stand every day in front of the camera and talk about the stocks and say it's going to go up, it's going to go down. And then you can never get it right. I mean, nobody can get it right always. It's never. Um, yeah, so tonight, President Biden is addressing and its State of the Union. And it's going to be really interesting. I want to know what he has to say for Russia-Ukraine situation in the coming days, because that's going to really tell us how the market is going to behave tomorrow, most likely, the way what he says today. Um, I'm sorry, did you ask a question? I don't understand your question, Tony. If I missed it, just go ahead and did I miss it? Okay. Um, absolute messaging. Okay. So, all right. Thank you so much. I did the short data right here. Yeah. So expecting a negative state of the union address, which might dampen stock market. Yeah, I think so. Stock will lose, but game. Yeah, as I said, this is a good point. That State of the Union is going to tell us how the stock market is going to look tomorrow, and I can tell you this much: that doesn't matter SoFi's earning, doesn't matter what they reported. If the conference call that's happening at 5 o'clock doesn't happen the way we want it, um, doesn't give like super exciting future, then stock will be affected negatively with the stock market. I mean, the saving grace we have is that it won't be down that much because we just had this wonderful earnings, the beat on all fronts. And so, especially the revenue for 2022, especially the EPS this time, which was amazing. I mean, this is good stuff that they reported. And so I feel that we are going to definitely get affected by the State of the Union, and also what happens in Russia and Ukraine in the meantime. Because remember, now when we are sleeping, is they're going to start waking up, and we know that 40 miles of freaking tanks and things are going, and they're talking about now asking everyone to leave the capital city area because they're going to bomb it. So it's not cool, man. It's like my heart goes out to everyone over there. Nobody should be in this day and age be subjected to that kind of a bulliness, in my opinion. And the best way to bring that person on their knees is to cut all the businesses, all the ties, and let. But okay, so yes, you can do that, but then who's going to suffer? The innocent people of Russia. Nothing against Russian folks; they're amazing people. I have some Russian friends; they are beautiful people. Nothing against them. But then when you have a leader like that, that's not cool. Um, average out. The weather's in 80. It is in 80s in Puerto Rico, not here. We have enough power for a squeeze. We gotta go and ask the Reddit crowd if we have enough power for the squeeze, because it's always fun to have or be in that situation. where we can draw a crowd together. But I think the Wall Street has gotten smarter since GameStop, and they will see this coming. And that's why I feel like, see, GameStop was just out of nowhere. And people thought that it's going to be only with GameStop, and then AMC came. So I feel like we are going to, it's hard to have a squeeze like GameStop that we have seen, so, okay. Yes, you have, Star. I have always seen your comments. I've always, yes, you have. Thank you for that. Um, I am from, for those of you who have, some of you have asked me this question a lot on today's chat. So I'm from India. For those who don't know, I was born and brought up in India, and I came here for my master's. And I'm from New Delhi, India. Okay, so this is investing in millions so far because thank you so much. My pleasure, my pleasure. And don't forget, we are in one stock market, and things change here very quickly. So always do your due diligence. Never believe anyone. Doesn't matter if it's me or anybody. It's all right. So no, it's not an online LMS company. I am on the other side of things, which is on the business side of things. I don't deal with test takers or consumers. I deal on the other side of things. Okay. So if I take a comment, January 2023, yeah. So my SoFi holding. So I hold a lot of option, and this is, yes, David. Coming back to the stock. Sorry, we got this is like, that's why having like a call or live always gets you in different places. So those options I have is mainly December 2023 and January 2024. I have some January 2023 as well, but my majority of my holding is for December 2023 and January 2024. And I shared in my previous video the EPS on how it's going to grow in the coming years. Now, that was without the bank charter. Now we have the estimate for the coming days. We are, or the coming year, we are going to see some of those revised, and I will be, of course, doing a video on that to kind of show you. But that's be an interesting thing to see exactly about how we go in terms of what adjustments and what analysts are going to come out now and give the price target. Because recently, a lot of price targets were changed because of this bad earnings, not bad earnings, but the bad market conditions that we have. And those are going to now, those analysts are going to come back, and they are going to see this data, and then they are going to basically come out and give a revised estimate on SoFi. Actually, let me do this. Let me quickly search here. Okay. We have some more arsenal here. Okay. Okay, so I'm going to show you a very, very straightforward earnings report, which I like to read that way because it just kind of saves a lot of time for everyone. And it just gives a clear-cut indication of exactly how it's going to work. Okay, so take a read here. I'm going to go off the screen now. And we have a call I'm going to switch over to shortly. Okay, so take a look. So SoFi reported earnings after Tuesday. What happened? So SoFi reported fourth quarter adjusted revenue of 279.88 million, up 54% year over year. The total beat a consensus estimate of 279.29 million. The company reported a loss of 15 cents, beating the estimate by 2 cents. Okay, adjusted EBITDA was 5 million in the quarter, the company's sixth consecutive positive quarter. SoFi added 523,000 new members in the quarter and ended 2021 with around 3.5 million total SoFi members. That's 87%. The most exciting thing that I see in this, all the earnings that came out, is right here, the new members, because I've said previously in my videos that it's all about members. Okay, and 3.5 million members, up 87% year over year. The total was a record and came in around 500,000 ahead of company's original full year goal. For the fiscal year, SoFi had a revenue of 1.01 billion, which is, I think, exactly in line with right here. It's actually, this is what they were, consensus was for the annual, and they actually came and they beat it that right here. Where is it? There. Okay. And 63%. We hit new highs across our key financial and operating metrics in the fourth quarter, finishing 2021 with record annual results. So if I were to take two things from this whole SoFi earnings, I would say this, that SoFi did a phenomenal job right here in adding the members. All their sales and marketing spend was worth it right here. Because remember, their cross-selling of SoFi is very strong. SoFi sells to their own members very aggressively. So the cost that they spend or the money that they spend in acquiring these new members, that money is going to serve them for quarters and quarters in the future because they're going to be doing a lot of cross-selling. And their TAM is increasingly expanding with the international that they went with Technisys. I think that the main point was to attract or to actually get into the Latin America market, which is such a young market for digital money. I've shown you the chart that shows you that the Technisys market is just the Latin America market is just so new that any company going there right now is going to have that first time advantage, where they're going to take a lot of market share on there. So I think it's very interesting stuff of what's going on with SoFi, especially in this earning. Okay, and then so now let's look at what the stock is doing. So it's still about 17%, not bad. It was actually trailing. So now it's started to go up again. It needs to cross that 1330 level right here for us to get to kind of move to the next. Yeah, so India, you guys guessed it. Thank you so much, Glenn, for your kind words. Really appreciate it. All right. Earning presentation call. Let's get going. So we have right here. I'm going to bring the call. And I'm going to go off the screen for a second, and then I will bring the call. And I'm going to stop share screen. All right. So when they start, we can actually continue talking. What I will do is I'll lower the volume a little bit more, and then we can continue to speak. All right. Okay, so earning presentation is out too. So let's look at here. Let's see that. Yeah, that was from before events and presentation. There you go. Okay, so I'm listening to the call, but in the meantime, I thought, why not we talk about this particular earning presentation here, so we have a better idea of what they are reporting and what they are saying here. Okay, so let's go this quickly, and I'm listening to the call as well. As soon as they start, I'm going to switch over. Okay, so remember, we know that they had 87% growth right here from 377 to 523. So that's 3.4. We have already product. This is where it's really, really surprising for me. I actually did a video. Let me see if you guys can. All right. All right. Let's go. All right. New member. All right. So now I was just want to make sure that you guys can see it. And it looks like you can see it. Give me. Okay, it started. Yes.
Good afternoon, and thank you for attending today's SoFi Q4 2021 earnings conference call. My name is Sam, and I will be your moderator for today's call. All lines will be muted during the presentation portion of the call, with an opportunity for questions and answers at the end. If you would like to ask a question, please press *1 on your telephone keypad. At this time, I would now like to turn the conference over to our host, Andrea Krokniak. VP of Investor Relations. Andrea, please proceed.
Thank you, operator, and thank you all for joining us today for SOFI's fourth quarter 2021 earnings call. Joining me today are Anthony Noto, SOFI's CEO, and Chris Lapointe, SOFI's CFO. They will share prepared remarks regarding the quarter's results and then take your questions at the end. Just after market close today, we issued a press release announcing SOFI's fourth quarter and full year 2021 financial results. Our discussion of our results today is complementary to the press release, which is available on the Investor Relations page of our website, investors.sofi.com. This conference call is being webcast live and will be available as a replay for 30 days, beginning about 1 hour after the conclusion of this call. There's also an accompanying investor presentation on our IR page. During the course of this conference call, we may make forward-looking statements based on current expectations, forecasts, and projections as of today's date. Any forward-looking statements that we make are subject to various risks and uncertainties, and there are important factors that could cause actual outcomes to differ materially from those included in the statements. We discuss these factors in our SEC filings, including our 2021 Form 10-K, which can soon be found on the IR page of our website and the SEC filings website, sec.gov/EDGAR. As a reminder, we are not required to update our forward-looking statements. In our presentation today, unless otherwise noted, we will be discussing adjusted financial measures, which are non-GAAP measures that we believe are meaningful when evaluating the company's performance. For detailed disclosures on these measures and the GAAP reconciliations, you should refer to the financial data contained within our press release, which is also posted to the IR page of our website. Today's discussion will focus on both the fourth quarter and full year 2021 results. As always, we encourage you to evaluate SOFI's performance on an annual basis, as quarterly results can be affected by unexpected events that are outside our control. Now I'll turn the call over to Anthony.
Thank you, Andrea, and good afternoon, everyone. Before beginning my prepared remarks, I wanted to take a moment to recognize the unacceptable tragedy that is currently taking place in Ukraine. It's been truly difficult to watch this series of events unfold over these past few weeks and escalate in recent days. No one should have to live in fear or under the threat of violence, which has now become a reality. Our hearts go out to everyone directly or indirectly affected by this tragic situation. Now on to our results. We had another strong quarter, hitting new highs across our key financial and operating metrics and finishing 2021 with record annual results. Today, we're in our best position ever to achieve our long-term strategic goal, to be the digital one-stop shop for the major financial decisions in our members' lives and all of the moments in between. Here are some of the highlights. Record fourth quarter adjusted net revenue of $280 million was up 54% year over year and increased sequentially from a very strong third quarter, despite the unexpected federal student loan moratorium extension at quarter end. All three of our business segments achieved higher year-over-year growth. We delivered record full-year revenue of just over $1 billion at the high end of our guidance, which we increased on our third quarter earnings call. We achieved our sixth consecutive quarter of positive adjusted Ebitda at $5 million and delivered on our goal of positive full-year Ebitda. We had an amazing quarter for member growth. We added 523,000 new members in the fourth quarter, a record in absolute number terms, and impressively up 39% versus the amount added in the third quarter. As a result, we ended 2021 with 3.5 million members, an increase of 1.6 million, up 87% year over year, and well above the 3 million member target set in January of 21. We also set another record with new product adds of 906,000 in the fourth quarter, up an incredible 51% versus the number of third quarter ads. We finished 2021 at 5.2 million total products, more than double the 2.5 million we had at year-end 2020. And at Galileo, we grew enabled accounts 67% year-over-year to 100 million. We were able to achieve these milestones in 2021 and get to such a position of strength today for three main reasons. First, we continue to drive strong growth through great execution across our three diverse businesses, which reflects our ability to capitalize on changing macro conditions. Second, the success of SoFi's unique financial services productivity loop strategy accelerated as we scaled our business in 21, which allowed us to exceed our original 2021 member growth target by 40%, and importantly, still hit our Ebitda target. And third, we took a giant step forward in 2021 in achieving our goal of becoming a household brand name via our SoFi Stadium affiliation, the success of our integrated multimedia campaigns, and the virality of the influencers we partnered with. I'll take these points one by one, starting with number one, how we drove strong growth through great execution across our three diverse businesses. In lending, we grew segment revenues by 30% year-over-year in the fourth quarter and 42% for the full year, even with the unexpected extension of the federal student loan payment moratorium in late December. Fourth quarter personal loan originations were a record of $1.7 billion, up 168% year-over-year, and more than double fourth quarter 2019's pre-pandemic total. Full year originations were more than $5.3 billion versus $2.6 billion in 2020 and $3.7 billion in 2019. Personal loans outperformed as a result of our improved execution, enhancements to our technology and credit models, and the quality of our loans. And through our lending as a service partnership with Pagaya, we added nearly 7,700 referred loans across a broader audience while maintaining our credit criteria. In home loans, we met our 2021 goals to diversify into purchase loans from predominantly refinanced loans and to re-enter the jumbo loan market. By the fourth quarter, we had increased purchase home loans from low single digits to low double digits as a percentage of SoFi's total home loan volume. And we relaunched jumbo loans in the second half of the year. This diversification will help drive continued growth in a rising rate environment. In student loans, we saw accelerating demand in the fourth quarter ahead of the January federal student loan payment moratorium deadline and anticipated rate increases in 2022. We originated nearly $1.5 billion in loans, up more than 50% sequentially, even with the surprise late December extension to May 22, which caused a reduction in demand during the final week of the quarter. Looking ahead, we expect continued strong growth in lending, driven by our ongoing momentum in personal loans, the end of the student loan payment moratorium, better positioning in home loans, and the many opportunities our new bank license presents. In financial services, we achieved record growth in products adopted in the fourth quarter, and importantly, a large step up in monetization that drove record revenue up nearly 2x sequentially. We added 857,000 new financial services products in the fourth quarter, up 56%, 2.5 million new financial services products, more than double the 1.2 million we added in 2020. We produced a 5x year-over-year increase in our fourth quarter total financial services revenue of $22 million, as well as our full year revenues of $58 million. Product improvements that drove the year's phenomenal growth include the following. In SoFi Invest, we gave members more selection and new features. We added 25 new cryptocurrencies, making SoFi. We offered 2 regular way IPOs to retail investors in the fourth quarter. The first was Rivian, the largest IPO since Facebook in 2012. And the second was Nubank, a leading fintech company, introduced stop limit trade orders in the fourth quarter and margin trading earlier this year. Its 2-day early paycheck, autosave, cashback, and no-fee overdraft protection. And with our launch of SoFi Checking and Savings, we now offer members 1% AP account fees or minimum balance, plus many of the free features members already enjoy. Our SoFi credit card, which gives points for both transactions and smart financial behaviors, really took off in its first full year. Spend, balances, and accounts grew at high double-digit rates, and we finished 2020 NPS score in the mid-50s. Platform, Galileo benefited throughout 2021 from growth in enabled accounts, transactions per account, and adoption of new products by existing partners, as well as the addition of diverse new partners. Fourth quarter segment revenues of $53 million was up 42% year over year, an acceleration versus the year-over-year growth in Q3 at 29%. And with the inclusion of a full year, Galileo added 11 million new end user accounts in the quarter, a 67% year-over-year increase to 100 million at year end. Galileo launched some clients and signed 9 new ones in the fourth quarter, bringing total full year adds to 44. We also grew Galileo's launched Toast last year and signed T. Rowe Price in the fourth quarter to service its future emergencies to power its new mobile banking app, Spruce. We acquired Galileo to leverage an owned and operated platform to drive benefit of a great business that further diversified our revenue. Now, as we announced last week, we're following the same playbook by acquiring Technisys, a leading cloud-native multi-product core banking platform. Adding Technisys is the next step in vertically integrating SoFi's businesses to further accelerate the pace of innovation of our best-of-breed financial products. We expect Technisys to be a growth multiplier for both SoFi and Galileo, in addition to realizing its own enormous growth opportunities, which are further strengthened in partnership with Galileo. We are well on our way to building the AWS of FinTech. Now let's talk about point number 2, the success of SoFi's unique financial services productivity loop strategy. Critical to the FSPL is creating best-of-breed products that build trust and reliability with members, which increases the likelihood they choose SoFi for a second or third product. When they do, we benefit from increased LTV per member by generating more revenue at little to no incremental customer acquisition cost. As a result, our higher LTV allows us to invest in more differentiated products and services, which in turn drives had its biggest impact yet on 2021 results. The scale of our top of the funnel products is now large enough that at the same cross-buy rates, fourth quarter cross-buy volume more than tripled year over year to more than 380,000 products. And more than 1/3 of our new products were adopted by existing members in the quarter, contributing to the 17% decline in our customer acquisition costs in 2021. I mentioned that our total year-end members of 3.5 million exceeded our 2021 goal by 500,000. Our unique FSPL advantage not only helped us exceed this goal, we did so without notable associated marketing costs. Instead, these FSPL efficiencies allowed us to significantly exceed our member and product goals, yet still achieve our Ebitda targets. This brings me to my third key success factor for 2021. Our ability to drive a dramatic increase in SoFi's unaided brand awareness, the unmatched reach of SoFi Stadium nationally televised games, the success of our various integrated multimedia campaigns, and the variety of the influencers we partner with. Here are a few remarkable stats. The 5 nationally televised regular season games at SoFi Stadium were seen by an average of more than 22 million households per game, resulting in a household reach of by nearly 70% in 2021 to a new record in the fourth quarter. And that was before an estimated 106 million people tuned in to watch the Rams win the Super Bowl at SoFi Stadium. Before turning it over to Quinn to share a few additional thoughts. In February, I celebrated my 4th anniversary as the CEO of SoFi. While I could not be more proud of all we've accomplished in such a short period of time, I am even more excited about what's ahead of us. We are just starting to reap the benefits from the enormous progress we have made on our strategic position, the breadth of our differentiated and diversified product suite, our tech platform that helps us serve the industry as we build the AWS of FinTech, our balance sheet of $4.7 billion in equity value, the exponential growth for our brand awareness, and of course, most importantly, our team. With that, let me turn it over to Chris for a review of the financials for the quarter and the year.
Thanks, Anthony, and good afternoon. We finished off a remarkable year by delivering record quarterly revenue and our 6th consecutive quarter of positive. Differentiated business model drives SoFi's durability and long-term growth potential. I'm going to walk you through some key financial highlights for the quarter and year, and then share color on our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the fourth quarter of 2021 versus fourth quarter of 2020. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release. And for the quarter, top line growth accelerated as we delivered $1 million, up 54% period, and at the high end of our guidance, $2 million. Adjusted EBITDA also at the high end of our guidance of $2 to $5 million. The full year, we delivered 1.0, up 63% year over year. Our original 2021 plan and what we guided $180 million in adjusted net revenue. The federal student loan payment moratorium would expire on September 30th. Included a full year of revenue recognition from our equity investment in Apex, which was called last January. Despite the 50 million plus of revenue headwinds created by those 2 factors alone, we still exceeded our original revenue plan by $30 million. From an adjusted EBITDA perspective, we delivered $30 million in profits above our original full year guidance of $27 million and up $75 million from the $45 million of losses incurred in 2020. Now on to the segment level performance, where growth accelerated across all 3 segments. Spent year over year to $208 million versus 21% in Q3 of 2021, driven by a 67% increase in funded volume to $3.8 billion in total, a new high for us. The largest contributors to funded volume growth were our personal loans business, which grew 168% or $1 billion year over year to $1.6 billion in originations for the quarter, and our student loans business, which saw more than 50 loans. We captured increased demand from borrowers remodeling their homes and refinancing variable rate debt into attractive fixed rate products. Additionally, we continue to improve our funnel. In student loans, we benefited from increased demand from federal student loan borrowers looking to refinance prior to the anticipated January 2022 expiry of the federal student loan payment moratorium. In addition, increased net interest margins and strong gain on sale margins drove material year-over-year growth in both in net interest income and loan sales revenue. The lending business delivered $105 million of contribution profit at a 51% margin. Overall contribution dollars were up 23% versus the same prior year period, but margins were. The slight year-over-year decline in margins was caused by lower home loans throughput with our third-party fulfillment partner, resulting in lower home loans revenue and margins. I'm pleased to say demand remained robust throughout the quarter, and were it not for these partner issues, we would have had strong quarterly performance. These issues have since been resolved by onboarding another third-party fulfillment partner. In addition, expenses were higher in the student loan refinancing business, where we increased marketing to capitalize on elevated demand in the lead up to the January 2022 federal student loan payment moratorium expiration. When the moratorium was unexpectedly extended to May 2022 at the end of December, we lost a week of revenue from anticipated federal student loan funding and had already spent the marketing dollars. For the full year, lending adjusted net revenue grew 42% to $764 million and at a 52% margin. Shifting to our tech platform, where we delivered net revenue of $53 million in the quarter, up 42% from the same prior year period. Overall segment growth was the addition of new accounts and the engagement and monetization of those accounts. We are encouraged by this leading indicator of Galileo's growth. Q4 contribution profit margin, which is down year over year given the investments we have made in technology capabilities overall and the migration to the cloud, but up sequentially from 31% in Q3 2021 due to fixed cost leverage we were able to achieve in the quarter. This one quarter does not mark the beginning of a trend, and as discussed previously, we plan to operate the business in the 20 to 30% contribution margin range for the foreseeable future as we continue investing to take advantage of the opportunity ahead of us. For the full year, the tech platform segment grew revenue 102% to $195 million and delivered $64 million of contribution profit at a 33% margin. On to our financial services segment, which continues to benefit from strong growth across all products and our improved ability to monetize that growth. This segment delivered revenue of $22 million in Q4, more than 5 times the prior year quarter at $4 million, and up 74% sequentially. Within the segment, year-over-year revenue growth was particularly strong in SoFi Invest, Lantern, SoFi Credit Card, and SoFi Money. As important, our year-over-year revenue growth was twice our exceptional product growth of 2.5x, demonstrating our continued progress in monetization. Invest added 362,000 accounts and reached 1.6 billion in total. Money added 276,000 accounts and reached 1.4 million in total. And Relay added 180,000 accounts and hit 930,000 in total. Contribution losses were $35 million for the quarter. While this is a slight improvement year over year, we remain in investment mode, focused on creating the right unit economics for each business to drive long-term sustainable growth. For the full year, segment revenue of $58 million was nearly 5x the $12 million we delivered in 2020, and our $135 million contribution loss was essentially flat year over year. Quickly switching to our balance sheet, which grew by approximately $600 million year over year to $9.2 billion in total, primarily as a result of growth in originations that accelerated in the back half of the year. In addition, we exited the year with $1.6 billion drawn on our warehouse facilities, less than 25% of our overall $7 billion of capacity. That low reliance on warehouse capacity allowed us to significantly reduce our cost of funds, and we ended the year very well capitalized, having raised a total of $3.6 billion of new capital. Our total book value is $4.7 billion, and our capital and leverage ratios are extremely strong. Finally, on December 6th, we redeemed all of the outstanding SoFi Technologies private and public warrants, which removed a significant source of P&L volatility for SoFi. We are excited about the strength of our balance sheet and will continue to make choices that ensure the most efficient cost and use of capital. The last thing I want to discuss is Q1 and full year 2022 guidance. It's important to note before getting into the details that the incremental net interest income from SoFi Bank will only contribute nominally to Q1 results and prior to fully originating loans in the bank, which we expect in May of 2022. That's because when we opened the bank in February, we did not contribute any existing SoFi loans to the bank as we initially capitalized the bank with cash. We are still transitioning our operations to have loan originations occur from the bank, and that transition will not be fully complete until the end of May. Over the last several quarters, our unique, diversified business model has proven to be an increasingly powerful competitive advantage. Even as we continue to invest in scale, we expect that strength and momentum to continue. Our Q1 guidance incorporates the negative impact of the unexpected extension of the federal student loan payment moratorium to May of 2020 to be consistent with those of the first 3 quarters of 2021. For Q1, we expect $280 to $285 million of adjusted net revenue, up 30 to 32% year over year, and $0 to $5 million of adjusted Ebitda. Had the moratorium expired in January, we estimate that Q1 revenue would have been $310 to $320 million, and Ebitda would have been $20 to $30 million. For illustrative purposes, we've included this alternative scenario in our investor presentation. For the full year 2022, we expect to grow adjusted net revenue 55% year over year to $1.57 billion and deliver adjusted Ebitda of $180 million. There are several recent developments that factor into our full year guidance. First, we assume the moratorium on federal student loan payments expires as currently contemplated on May 1st, 2022, and student loan refinancing origination volume will normalize at pre-COVID levels partway through Q2 and remain at those levels from that point through the remainder of the year. Second, we assume the SoFi Bank will begin contributing to SoFi's results more meaningfully in Q2 rather than in Q1 when we open the bank. That's because, as I just mentioned, we opened the bank with no loans and initially capitalized it with cash from our balance sheet. This is an important distinction because we won't begin to realize the lower cost of capital benefits of the bank until we can originate and fund loans in the bank. And we believe it will take until Q2 to build the appropriate loan balances to see more than a nominal impact. Third, we assume that Technisys revenue growth will be 20 to 25% for the full year and start contributing to our business following the close of the transaction. And fourth, as discussed previously, we expect our core SoFi business, excluding the impact of Technisys, to deliver incremental Ebitda margins of 30% in 2022 as we continue investing to drive sustainable growth for years to come. Technisys will contribute a small amount of Ebitda in 2022, but as we mentioned last week, 2021 was a year of significant investment for Technisys. Over time, we expect this business to be additive to consolidated incremental Ebitda margins. The last thing to cover on guidance is our stock-based compensation expense, which we currently forecast to be between $80 and $85 million in Q1 and $340 million for the full year. In summary, we could not be more proud of the results SoFi delivered in 2021. We exceeded $1 billion in annual revenue and delivered a full year of positive Ebitda. We continue to be extremely well capitalized and are excited about the opportunities in front of us. We look forward to another strong year in 2022. With that, let's open it up to questions.
Thank you. We will now begin the Q&A session. If you'd like to ask a question, please press *1 on your telephone keypad. And if you'd like to remove that question, press *2. As a reminder, if you're using a speakerphone, please remember to pick up your handset. Please limit your questions to one question and one follow-up so we can accommodate as many participants as possible. You're welcome to rejoin the queue by pressing *1. We will now take our first question from the line of John Hecht of Jefferies. John, your line is connected. Please proceed.
Thanks very much. A nice quarter, guys, and thanks for the detailed guidance. Very good member and product numbers for the fourth quarter. Maybe can you give us color on what drove that in terms of customer acquisition channels, customer acquisition costs, any change there, and where you're seeing opportunities and so forth?
Thank you, John. So it was an extraordinary quarter for member and product growth, and it's the culmination of a lot of hard work that's gone into the company over the last 4 years. Everything from the member home feed in the app to developing a use of data to make recommendations to our members based on their information and other members' information in a personalized way, a referral program, a rewards program, and then of course, just differentiating the products individually themselves. And then layered on top of all that is just the hard drive that we've made to increase unaided brand awareness. As a financial services companies, our members need to trust us. We need to become a household brand name, and the ability to leverage the broad reach that we talked about in our prepared remarks of SoFi Stadium throughout October, November, December really gave us a nice lift in unaided brand awareness, which makes all of our marketing more efficient. The combination of that and the product differentiation that we've added as it relates to products like SoFi Money and SoFi Invest, which I talked through in the quarter, really drove a really strong growth rate. The specifics on the decline in customer acquisition costs on a per member and per product basis, but it was really the culmination of product, marketing, operations, and just a really strong integrated campaign across traditional media, digital, and social influencers.
Yeah, thanks, John. So if you look at Q4 2021 total sales and marketing divided by new members, you'll see that our overall sales and marketing per new member was down nearly 20% sequentially. And if you look at this on a full year basis, it was down about 18% when comparing it to full year 2020.
Okay, that's great. Thanks for that color. And then second question, and I know, Chris, you talked about the contribution from the bank over the course of the year, but maybe can you give us kind of an idea of, as rates move during the year, what that does to the kind of context of the revenues and expenses coming out of the bank? Just assume we go through a rate hike cycle.
Yeah, absolutely. I can address the overall question on rates, but what I'm in line with what's implied by the forward curves today. And as a reminder, at a high level for the lending business overall, we seek to maximize profit dollars in our lending business while staying within the 40 to 50% contribution margin range that we've talked about historically. In Q4, we delivered $105 million of contribution dollars at a 51% margin across our entire portfolio, even as rates increase. And we expect to maintain this type of approach going forward, even with the bank. As you know, you can't really look at rate volatility in isolation, as we have a number of levers that we can pull to moderate the impact of interest rate movements, such as pricing, the structure of our loan sale agreements, and hedging. From a pricing perspective, we've worked really hard over the course of the last several years to build the muscle and pricing capabilities to react really quickly to changes in rates and achieve our overall margin objectives. In Q1, we've started to increase our weighted average coupon in order to keep pace with rate moves and offset the impact of margin compression that's expected. And demand has remained fairly robust, specifically in our personal loans business. From a sales construct perspective, some of our forward flow deals are structured with fixed prices, wherein we don't take interest rate or credit risk. And we also, as you know, have an incredibly diversified exit mix, wherein we don't need to overly depend on securitization markets as an outlet, and therefore we're a bit more insulated in market dislocation situations. From a hedging perspective, we currently hedge loans on the balance sheet subject to rate volatility in order to eliminate that impact of rates on future gain on sale. And then the last thing I would note as it relates to rates is, and this is what we've discussed previously, we benefit from the fact that we have a diversified portfolio of lending products that do well in different rate environments. In rising rate environments, our personal loans business does really well, and we're seeing that right now. And in lower rate environments, our student loan refinancing and home loan refinancing businesses do well. Overall, our diversified model allows us to adjust in real time and allocate capital to businesses and opportunities that we do well in, that do well in specific market and macro backdrops.
The additional thing I'd add to that, just for everyone's benefit, is, if you go back to 2018 and track interest rates throughout that year, then into 2019 and 2020, we've sort of navigated an environment of rates going up meaningfully. I think at one point in 18, we were expecting 4 to 5 rate increases in 2019. We were geared up for that. We spent the whole year really putting in place the right marketing channels, the right distribution channels for our loans from a whole loan standpoint and ABS standpoint, in addition to our funding costs and our pricing capabilities, prepared for that. When we got into 2019, I think there was maybe 1 or 2 rate increases, and then the market completely switched, not unlike we started hearing about today. And we were able to pivot our business to go to those areas that benefited from a flat rate environment. And then again, during COVID, when rates went from, I think Fed funds was at 1.5% rate to 0, we pivoted again. So we're not always going to be perfect. We'll make our mistakes, but having navigated through that volatile environment in the past gives us great sort of playbook to navigate.
Thank you for your question, John. Comes from Ashwin Shivakar of Citi. Ashwin, please proceed with your question.
Thanks. Hi, Chris. I was wondering if you could kind of walk through the guidance assumptions.
That one, Ashwin. So we aren't providing specific segment or product level guidance or quarterly progression guidance at this point, but in order to help bridge you from where we are from a current run rate perspective to our full year guide at the revenue level, there are a few things that I would call out. First, there are several businesses or factors that are not in our current run rate, but will have much more of a meaningful impact beginning in Q2 and beyond this year. That bucket includes first, a return to normalized pre-COVID student loan refinancing originations once the moratorium ends, and we've quantified that Q1 lost revenue and contribution impact for you as part of our guide. Second, we expect to be fully originating loans in the bank and benefiting from a lower cost of capital by May of this year, and the extended hold period benefit a few months thereafter. And then third, we'll have contribution from Technisys following the close of the transaction. The second bucket to consider is continued growth across all of our segments. Within lending, I just mentioned the student loan refinancing business, but we also expect to see continued momentum in our personal loans business as rates rise and folks look to refinance out of variable rate debt into attractive fixed rate loans. And we continue to improve our overall funnel conversion, which has had a really strong impact on growth in the last several quarters for us. We also expect to see strong growth in our home loans business as we move beyond third-party throughput issues that I talked about in my prepared remarks, and continue to scale our overall purchase and jumbo programs, as well as continue to capture a large opportunity that we have with our existing member base. Within financial services, we're expecting to see continued growth in products and monetization. And the things that are going to drive that monetization are increased assets under management in our invest business, increased spend on our money and credit card businesses, as well as new product releases, premium services, and scaling our ETFs. Just quickly hitting on some of the higher growth drivers within financial services. In money, we generate revenue, as you know, from net interest income and interchange. Given the spend expected growth in accounts that we're going to get now that we can offer a competitive interest rate, we're really optimistic about being able to further drive monetization here. In invest, we generate revenue from a number of sources: net interest income, share lending, payment for order flow, digital assets. More recently, we launched margin and soon to be options. And all of those are driven by assets under management. And we expect continued growth here as our AUM per product trends continues to do really well and our member base grows. And then in credit card, we generate revenue from interchange and balances, and are really optimistic about recent trends that we've been seeing here, particularly around spending. Collectively, the reference trends that I just talked about are really helping drive growth in monetization, and you can start seeing that play out in the actual numbers. In Q4 alone, our overall revenue per financial services product was up more than 2x year over year and nearly 40% sequentially. Then the last thing I call out as it relates to the segment forecast is within the tech platform, we expect continued growth in accounts, transactions per account, growth in new partners, and obviously the combination with Technisys to really help drive growth there in a high margin segment.
Got it. Okay. And just a clarification, are the Pagaya loans included in the personal loan originations number? And perhaps you could use that as a stepping off to talk about, future partnerships such as this that might be in the pipeline.
Yeah, and for the benefit of others, Pagaya is a partnership that we entered in as it relates to people outside of the credit box that SoFi underwrites. We only approve about 30% of our personal loan applications because we're focused on prime borrowers, not near prime or subprime. When we first arrived here 4 years ago, we built a strategy which we called the decline monetization strategy, which was a way of taking applicants to SoFi and sending them to other underwriters, and we get a lead generation fee, and we do that through Lantern. We wanted to build on that success and contribution to our business and help satisfy even more people that are applying for loans. And our Pagaya partnership, think of it as a lending as a service. It's completely integrated with our application process. The credit and approval pricing models are run simultaneously. The loan is underwritten by Pagaya and a partner. We do not take the credit risk on that paper. We do the servicing on that member and offer them other products and services. This was our first quarter where it contributed to the financial services revenue number because it is a referral revenue fee and a lending as a service fee. Chris, I don't know if you want to talk about the loan volume. It's not included, correct?
No, we don't disclose the actual loan volume. What you'll see in the disclosures is the number of members that are attributable to Pagaya, and you can see that in our financial services segment, but we outline that in the actual disclosures.
Thank you for your question, Ashwin. Our next question comes from Betsy Grusek of Morgan Stanley. Betsy, please proceed. Betsy, can you confirm that your line is not muted? Okay, in the interest of time, we're going to move on. Betsy, you can read.
Thanks. So, Anthony, you talked a lot about, and Chris, both of you, about the marketing efficiency that you're seeing, lower CAC, and you spent maybe $15 million more in marketing. Could you talk a little bit about how you're thinking about how much you'll be spending, what it means for the growth rate and the incremental margins?
Yeah, I can take that, Moshe. So like I said, we have made really good progress in terms of overall efficiencies. What I would say in terms of the overall outlook, we're not going to provide it at the segment level or spend level detail, but what I would say is we're at the level that we currently need to be at in order to support our longer term 30% margin target at a consolidated level. As you know, we're right now at the right unit economics within our financial services segment. And we're seeing really strong cross-buy trends, as we alluded to, where we're starting to feel comfortable about shifting more marketing dollars towards those lower CAC products.
Got it. Thanks. One of the things that we've talked about over the last couple of months as you've gotten the bank closed and up and running is the ability to use that as a tool to get direct deposit customers. I know that you just launched the deposit suite of products relatively recently, but could you talk about any progress there in terms of getting into direct deposit for the SoFi Money customers and what that means, for engagement?
Yeah, it's still early days, and I would also just emphasize it's not something we're just starting on now. It's really something that we started to emphasize throughout 2021, and we're starting to see the benefit of more and more each quarter. Q4 and another 50% from Q4 into Q1 already, and we obviously just started to introduce it. One of the things that I'd say about the direct deposit activity is that once it does begin, you do see the pickup in spending, which Chris alluded to. So the increases we're seeing are steady and positive and to the right, but we're really just getting started. One of the things that may not be obvious from the outside looking in is that when the Federal Reserve approved our bank license in January, we had to go through a whole product launch. We had to switch the technology, we had to switch the reporting, we had to change all the marketing collateral, we had to change all the relationships with affiliates, and that process is still ongoing. So it's not like you just flip a switch and all of a sudden all the things that was driving your business before can now drive this new product and service called SoFi Checking. It really was sort of a close down SoFi Money and stand up SoFi Checking or Savings. And since we have over 1 million accounts as it relates to our money product, which we disclose, we had to do that process in a very coordinated fashion. I will give the team a ton of credit. It's been executed incredibly well, knock on wood so far. But we went through a product rollout as if it was an entirely new product, launching it first to our existing members, and then slowly rolling it out to new members. And we're just now actually switching over a lot of the marketing collateral with affiliates, et cetera. But in terms of the direct deposit initiative, it just didn't start in February. It started when we launched 2-day early paycheck. It started when we launched overdraft protection. It started when we launched autosave, and it's been a continuous process. So really strong growth in Q3 to Q4, 50% higher direct deposit adds per week in Q4 versus Q3, and right now we're up another 50%. The numbers are small, but it's contributing, as you see in the financial services.
Question is from Mihir Bhatia of Bank of America. Mihir, please proceed.
Great, thank you. Thanks for taking my question. Appreciate that you're not giving, guidance by product, but maybe you can just talk about a couple of things within that platform, just overall from a growth perspective. Maybe just give us some expectations on account growth in that platform, and specifically the two things I'm hoping you can address have to do with stimulus, the impact of stimulus on account growth at neobanks, if you're seeing any impact from that, and just the competitive backdrop and any major contract renewals that you may have coming up.
Yeah, I think it's important to contextualize for everybody. The Galileo business is probably not that well understood in terms of how the business drives growth and what the growth opportunities are. So let me just frame that at a high level first. We're absolutely benefiting from the sector transition of physical payment to digital payments, and that's impacting the entire business, and that's the secular trend behind it, whether that's B2B payments or consumer payments or B2C activity. Here are the growth drivers. First is the growth of accounts of our existing partners. So that's the 100 million that we reported this quarter of enabled accounts. That continues to grow from existing partners. That 100 million accounts that are enabled, we can provide new products and services to that installed base of Galileo's partners. And we have a very robust pipeline to add new products and services to the existing accounts, things like secure debit, dynamic fraud protection, and a number of other products that you'll see us introduce throughout the year. So the first driver is the growth in those accounts. The second driver on top of that is new products against those accounts. And then, of course, underlying all of that is just the increased activity within each one of those accounts. The second sort of bucket of drivers is growth of new partners. Some of the new partners we announced there are a good example. H&R Block with the consumer app called Spruce is an example of a new partner, and we added 44 new partners, entirely new partners, in 2021. The third growth driver is international. We have 4 of the largest neobanks as partners in Mexico. We're expanding into Colombia. And now on the back of the acquisition of Technisys, we can enter another 12 markets that they're already in and operating in. So international expansion is another bucket. And within that bucket are the first 2 buckets as well. And the last thing I'd say is that we continue to diversify our relationships. The business was built on the back of B2C or consumer neobanks, but increasingly we're much more attractive to enterprise businesses, and we'll have a competitive advantage in some of these cases. Enterprise businesses use commercial BINs, while SoFi also has a bank. So SoFi Bank could be the sponsor bank to commercial partners, enterprise partners, and have a 10 to 12 basis points advantage because we are the sponsor bank on top of the fact that we're also a payment processor. So we're really excited about the organic growth opportunities at Galileo. Without a doubt, some of the same store customers will face, stimulus, tough comps, et cetera. And our goal is to overcome that through all these other growth drivers. And that's what we're focused on, and our outlook reflects it. So we absolutely understand the headwind that may be there for some of the existing partners, but we have a bunch of other tailwinds to continue to drive strong growth there, not to mention the increased growth opportunities from the partnership with Technisys and vice versa.
Got it. Thank you. That was quite comprehensive. Maybe just switching gears a little bit. I was curious about your guide. Your EBITDA, effectively, you're going from 5 million to 60 million ramp. I understand some of that is purely the student loans coming back, and we saw the Q1 impact of that. But maybe just talk about some of the other factors driving and scale driving that.
Yeah, absolutely. In terms of your overall question on how to bridge from where we are today in terms of Ebitda and 180 for the year, there are a few things I'd call out. Similar to what I said on the revenue guide, there are things that will start contributing more. As you pointed out, the student loan refinancing moratorium, the bank will also start contributing more at scale towards the end of Q2 and thereafter. And then you're also going to see good growth across our higher margin businesses, specifically our personal loans and Galileo. What I would say in terms of quantifying the overall impact of the bank, I want to reiterate again that we just opened it a few weeks ago in February, and we capitalized it with cash, not loans. The reason that's really important is because there were 0 loans in the bank as of day one, and we just started originating loans within the bank. We expect to be fully originating those loans by the end of May of this year. As a result, the cost of capital benefits will start occurring in Q2, and the extended hold benefits will start 4 to 5 months thereafter because we're already holding loans on the balance sheet for 3 to 4 months. If you were to assume normalized pre-COVID student loan refinancing originations and continued growth in our personal loans business, as well as an extended 3-month hold period and relatively conservative cost of capital savings assumptions, the impact would be about $70 to $75 million of revenue for the year and $20 to $25 million of adjusted EBITDA. That's what's currently embedded in our guide today.
Thank you, Mihir. Our next question is from Dominic Gabriel of Oppenheimer. Dominic, please proceed.
Hey, great. Thanks so much for taking my questions. I just want to go back to actually, and you covered this a little bit, but I want to go back to the average revenue per product in the financial segment, which was much better than I was modeling and really strong. Maybe you could just go back and talk about the mix of financial products within the segments and how that mix really changed in the quarter, and which products you think are, getting adopted perhaps faster than you would have expected or a little slower by your customer base on a cross-sell. Any color around those metrics would be really, really, really helpful. Thank you.
Yeah, I'll hit on the financial component and then I'll turn it over to Anthony. But segment, we ended up driving $22 million of revenue in the quarter. That was up 5x year over year from the $4 million that we did last Q4. So an $18 million improvement. Where that growth ended up coming from was our invest business, which contributed about 32% of that growth. Our money and credit card businesses combined delivered $8 million on the quarter and contributed about 42% of the growth. And our Lantern and Pagaya businesses delivered about $6 million of Q4 revenue and contributed to about 22% of the growth.
In terms of the performance of each of the products, I'm looking at the net adds across each of the products. And I would say at a high level, it was a strong quarter across all the products. It would be hard to pick out one product and say it was not growing as fast as we'd like. We had these are all disclosed and you'll see them in the 10K. We had a really strong growth in the money product on an absolute basis and a relative basis, really strong in brokerage and in crypto, as well as robo. I think of those products, the one I think we could differentiate a lot more. They all have opportunities. We're focused on fast selection, content, and convenience, as well as making the products work better together. But of those 4 that I just mentioned, robo is the oldest of the 4 products and one the team is interested in differentiating more, and we think there is a big opportunity there to do so. That doesn't mean we're not going to differentiate on brokerage and launch options, which is down the road, or do other things on money as it relates to high yield savings, et cetera. There's still opportunities in every one of the products. That's the one we've probably invested the least in. It's still a big opportunity. I think about credit card and our at-work product and international, and I would tell you credit card I think is a huge, but we've really just scratched the surface. We have one card. It's not segmented by different types of find different types of members. You have spenders. You also have revolvers. There's a lot more personalization we could do with the credit card. And there's also an opportunity to make the credit card work better with all the rest of our products. So we're excited about the opportunity in financial services products. The trends were really strong in the fourth quarter, and it'd be hard to pick out one or another of underperforming. But I do think that what I characterize are some of the opportunities to take some of the products to the next level.
Great. You kind of led me straight into it with credit card. You know, that is a huge opportunity. It can really drive the ARPU significantly higher compared to some of the other products just by its nature. And so I was just curious about, you know, what is the target audience when you think about the average FICO score? You mentioned prime on some of the other products in particular, and just how you think about the life of loan loss rates that you would be targeting for these products as you ramp it up. Thanks so much.
Yeah, the credit card product is still a prime product with very high FICO score over 700. You know, we think there's a lot of opportunity to play in that segment with differentiation within it. You know, over time, we could explore different opportunities for a broader member base, but, you know, we sort of have all these cylinders going at the same time, and it's constantly a debate between, are we doing enough? Are we doing too much? Are we doing enough? Are we doing too much? And I think we have the right balance as it relates to credit card. We want to build a high quality card base. We want to drive strong engagement, and we want to make sure we have great product market fit before we step out of our comfort zone. So there's still a lot of room within the prime customer that we have, and no reason to change. We can differentiate within that still.
And in terms of CECL reserves, Dominic, you can see in our filing that we're running at about a 5.5% loss rate right now, which is relatively consistent with our personal loans business. So really healthy.
Thank you, Dominic. We're currently at the top of the hour, so we do not have time for any additional questions. So I'll pass the conference back over to Anthony for any closing remarks.
Thank you, and thank you all for tuning in today. Before we wrap up, I wanted to share some final thoughts. The road to this point at SoFi has had its share of unexpected twists and turns, and every single time our team has shown the grit, the perseverance, and cohesion to navigate through the fog of uncertainty to achieve our goals and come out stronger. Not only have we managed to exceed our already ambitious goals, we've accomplished more in 1 year than most companies achieve in their lifetime. As we've turned the page on 2021, 2022 has started off with an even more volatile environment with greater uncertainty. The fog of uncertainty excites me. It creates the greatest opportunities for those who dare to win. It's when leadership matters most because it's when the winners who will take the most are decided. I love our team, I love our strategy, I love our company, and I love where I work. I wake up every day trying to be a better leader than the day before and reminding myself that who dares wins. For the first time in 4 years, I also wake up every day knowing the only thing between us and realizing our ambitions is us. I would take that setup any day of the week and twice on Sundays. Thank you for your time today, and we look forward to addressing you next quarter when we report Q1 results.
That concludes the SoFi Q4 2021 earnings conference.
Okay, friends. Wow, that was quite a good conference call. I actually listened to the whole conference call for the Q3, and I'm telling you, this was one of the best conference call that I have attended for any of the banking companies. I love a Tesla conference call as well because of this uncertain behavior or Elon's whole attitude. But this is awesome. Okay, so now I'm going to quickly share my thoughts on the conference call. I was taking some notes as it was going on. So one of the most important things, and I think I mentioned during the release as well, I'm going to point it out again, and I'm actually going to share the screen and show you a few things that I think are outstanding for this. Number one, 30% segment revenue quarter over quarter. This is really bullish. That means they had or 40% year over year. So 30% segment revenue, that means their segment of loans, their segment of student loans, personal loans, grew 30% year over year, which is an amazing beat, an amazing number. Number two, personal loans, 1.7 billion for this year, double than what it was last year. Now, numbers like that is only possible if the execution, if the whole plan, the team and management is very strong and they are following strict principle on who are they going to or who they are going to approve the loan for, and also the default rates. So it's very, very exciting. Full year revenue for 5.3 to 5.6 billion. Again, this is the total revenue we are talking about. Now, 2021 goals are met in all the 2021 goals were met in 2021, which is, of course, a very bullish sign from a company who has gone through so much. Remember, their student loan was cut and right abruptly in 2020, and then that was their start of their business. So that was a very, very good, I would say, a beat on all the numbers. Now I'm going to share quickly with you. Let me actually add this here. And then I'm not going to take too much of your time because we are already in almost 2 hours here, and I know we all have to go. Now, take a look at this. So product growth, this is very exciting and very, very important. Number 2, Galileo accounts 100 million from 89 million, a 67% growth. I thought that, Galileo is very strong, but this is anything over 50% is really, really strong. Next thing, lending and financial services products, 4,094 product as compared to 3,237 in Q3. Just think about it, how many products they launch in the financial services. And he even said, or Anthony Noto even said in the closing remark, that financial segment is very small for them and very new for them. Like, for example, credit card, they only have one credit card. So it's going to be really, really exciting when they add more services. Now they are a bank. The other thing that really kind of struck a chord with me is SoFi Bank. So SoFi Bank, nothing is going to be or will be added in the books until Q2 of 2022. Because Q2 of 2022, right now, as I'm pretty sure you also heard that Anthony Noto mentioned in the call, that they had no loans whatsoever when they started the bank. So they put their own money in the loans. So now what's going on is that they are going to be generating loans, then they're generating revenue on the loan, interest rates, and when interest rates go up, banks make more money. That's why banking stock is usually good when the interest rate is going up. Let's not talk about the inflation right now. Let's keep that topic as separate. Technisys, 20 to 25% revenue will be considered when the deal is closed for the year, for the 2022. On top of that, core SoFi is business is about 30% for 2022 growth, EBITDA growth of about 30% in 2022. Then on top of that, the student loan they are banking on that is going to come back in May or in June of 2022. So all this combined is giving them this guidance right here. So as you can see, I'm going to now quickly go over and look at the actual guidance. There it is. There. Okay, so this is where they're saying that implied year-over-year growth will be 30%, 280 for low and 285 for high. This is a very thin margin. They are basically saying that the revenue for Q1 of 2022 for low will be 280 and high will be 285. And remember, we do not have the banking charter effect in Q1 of 2021. We do not have the Technisys effect in Q1 of 2021. So Q2 of 2022 is going to be very exciting quarter for SoFi going forward. That's in my opinion. Q4 of 2022 or Q2 of 2022 is going to be a solid, very strong. If you look at the EBITDA, what they're growing over here, look, till 2021, they were negative, of course, 45. And in 2021, they turned positive. Things are only going to accelerate from here if you add our Technisys revenue, if you add the student loan, if they're ending, and if you add the total 30% growth year over year that they're saying. So all of this is really bullish sign for SoFi as they grow into 2022. Look, 1.57 billion of total revenue 2022 guidance, which is massive and huge because they were saying 1.4 billion. Now it might seems to us a small number, but think about it. Their member is going to grow and they are going to add more and more revenue per member. So that is going to be very exciting. So I think SoFi did a phenomenal job, really phenomenal job in the growth. Let me actually make this a little bit bigger. Okay, so this is insane. 2020 is 1.8. Look, 3.4 million members from 1.8 million members, 87% increase. Now, in these times when the whole economy, Q4 was really bad in a way. Well, SoFi was good because of the Super Bowl that happened, the advertisement that they did, the money dance, and also the IPO. So for SoFi, it was good, and that's what it reflects over here. In Q1, we are going to see the SoFi, the Super Bowl effect that's going to come. So I think it's really exciting to see this company mature, because the sign of maturity is that they're able to come out and give a guidance that tight right here, that, they're between 280 to about 285. So I'm really excited what I see here for SoFi. And I really, really hope that stock market doesn't, or Russia-Ukraine situation doesn't really punish this stock tomorrow. If you pay attention, I'm going to actually share this with you now. I think I can bring it here. The stock, as Anthony Noto was speaking, right here, take a look here. Okay, so you can see. All right, so if you can see over here, this was right here is the resistance. They broke, the conference call started, and it tried to break the Fibonacci level right here, 61.8. And then after that, it kind of came down and it tried to break again, did not. And this is where Anthony Noto made mark of that bank charter, and how in May of 2020 is when they will start seeing the effects of the bank charter. So that's when they said that, in May, they're going to come and see the effect, because they started with 0 loans. And then after that, it kind of, they will start making the loan, and then they will start generating money from it. And then Technisys also will come in the second quarter of 2022. The stock really did fly after that. And then we saw some down right here. It touched the 61.8, tested again, and then it went up again. So it is going to be a very interesting chart for tomorrow to watch and see if it's able to kind of, go and cross this or come back to this Fibonacci level, or it's going to go, because the next Fibonacci level right here on the chart is at 1485 right here. That's a strong, strong level, because this is so huge. Look at the difference between the two. This is massive. So I really hope that Biden doesn't say anything that crashes the market, and Russia-Ukraine keeps quiet to see if this stock can move in that direction. Again, congratulations to all of you, those who are holding this stock. Congratulations to all the investors. I hope I was able to provide some value through this live stream, and you guys enjoyed it. That was my intention, to have like a live stream and also a call. This is first, so we'll get better. Sorry for the audio. This was not expected. Audio never had any. I don't think there was an internet issue at the office, because it's pretty strong internet here. So, and hopefully next time it'll be a little better as we can try. All right, great. Thank you so much for being here. Thank you for all your time and being with me and spending this evening with me. And let's see what happens tomorrow. Let's see what the stock or SoFi stock does tomorrow. I'll make a quick earnings video to kind of go over. I haven't looked at all the numbers yet. It takes time to kind of read all the numbers and the details, and then I will do a video. And also this next 3-4 days will be a little bit quieter. I'm traveling, as I told you in the beginning, and I'll be back like Sunday night, late night. So I'll go back to regular videos starting next week. Next 2-3 days will be light in times. Thank you so much, everyone. You all have a wonderful evening, and thank you. Take care.